Hello and welcome to AI Market News by LM. Today, we're digging into something pretty wild that has everyone talking, this global everything rally. This video's audio is automatically generated by NotebookLM, an AI-powered tool. The reference sources used in this summary are listed in the video description. As this content is AI-generated, there may be errors in proper names, pronunciation, or unnatural speech. This video does not provide investment or trading advice. Please make investment decisions at your own discretion. So here's what we've got on tap. First, we're going to unpack this sudden wave of optimism that's sweeping the markets. Then we'll connect the dots to the big moves happening in trade and geopolitics. After that, we'll hop over to Japan to see how a historic leadership change is shaking things up. Then we'll try to decode what the world's central banks are signaling. And finally, we'll look ahead at what to watch next to figure out if this rally has legs. All right, let's kick things off with the big picture. In just the last couple of days, it's like a switch flipped. A huge wave of optimism has just washed over the global markets, and it's lifting everything. Stocks, gold, you name it. It's erased a lot of recent losses, and it's left everyone asking one simple question. And that's the million-dollar question, right? Why is everything rallying all at once? I mean, think about it. Normally, when stocks are up, safe havens like bonds or gold are down. But not right now. They're all partying together. So what's going on? What's behind this sudden burst of confidence? And when you look at the numbers, the scale of this thing is, well, it's pretty impressive. The S&P 500, it just clocked its best two-day run since June. At the same time, the 10-year Treasury yield dipped back below 4%. That tells you bond traders are feeling good about the future. And it doesn't stop there. Gold is hovering near record highs, and markets in Asia are hitting new records. This isn't a fluke. It's a big, synchronized move that points to a real shift in market psychology. And if you want proof in a single number, look no further than the VIX. You know, Wall Street's so-called fear gauge. It collapsed. It dropped a massive 10 points in just 2 sessions. That is a huge sigh of relief from the market, and that's the kind of thing that gives investors the green light to jump back in and put their cash to work, which, you guessed it, just fuels this rally even more. So where is all this sudden sunshine coming from? Well, you might be surprised. It's not really about economic data, at least not yet. The biggest catalyst seems to be coming from the world of geopolitics and some high-stakes diplomacy playing out on the world stage. Okay, a massive piece of this puzzle is the sudden change of heart on US-China trade. We've got this quote from President Trump signaling a major de-escalation. Instead of all the tariff talk, we're suddenly hearing optimism about a fair and great trade deal before a big meeting with President Xi. And to really get how dramatic this shift is, just rewind the clock a couple of weeks. Remember back on October 10th, the market was in a nosedive because of what was called an angry and urgent threat of new tariffs. Fast forward to today, and that feeling has done a complete 180. It's what's allowed the S&P 500 to claw its way back and wipe out all the losses from that tariff scare. And hey, it's not just about China. We're also seeing other smart, strategic moves that are boosting investor confidence. Take this landmark pact between the US and Australia for critical minerals and rare earths. This is a direct play to shore up supply chains for things like semiconductors, electric vehicles. Basically, it's about reducing reliance on any one country and lowering that long-term geopolitical risk. All right, now let's shift our focus and head over to Asia because there's another major political story adding fuel to this fire. A truly historic leadership change in Japan is creating its own powerful market narrative, and investors are scrambling to get ahead of it. This is big. Japan has just made history, with its parliament voting in Sanae Takaichi as the nation's first ever female prime minister. I mean, this is a watershed moment for the country. And, as we're about to see, it's having a very real, very immediate impact on the financial markets. And this has instantly kicked off what traders are already calling the Takaichi trade. So what is it? The core idea is simple. Bet on a weaker Japanese yen. Forecasts are already pushing the dollar up against the yen, with some traders targeting that 150 to 153 range. But why? Well, it all boils down to the policies everyone expects from her new administration. And here's the logic behind it all. Her platform is all about growth, right? She's pushing for more government spending on things like defense and tech, and crucially, she's a big supporter of continued monetary easing. That just means keeping interest rates super low to get the economy humming. Now, whenever a country signals it's going to spend more and keep rates low, its currency usually weakens. And that is the engine driving the Takaichi trade. Okay, so geopolitics provided the spark, but for this rally to have any staying power, it needs the big guns, the world's central banks, to be on board. So let's try to decode the signals coming from the Fed, the ECB, and the Bank of Japan, because honestly, their next moves are absolutely critical. When it comes to the US Federal Reserve, the best crystal ball we have is something called the CME FedWatch tool. Basically, it sifts through the futures markets to figure out the exact probability of a rate hike or a cut at the next Fed meeting. It's like having a direct window into what the big money is betting on. So what's it telling us right now? Well, it seems the market is totally in sync with what the Fed itself has been projecting. There are no major disagreements, no big arguments brewing. And what that means for us is that there's a pretty low risk of some surprise policy announcement that could just torpedo this rally. For now, it's looking like steady as she goes. Meanwhile, over in Europe, all eyes are turning to the European Central Bank. President Christine Lagarde and a few other key officials are scheduled to speak this week, and you can bet that every trader on the continent will be hanging on their every word, listening for any little clue about where Eurozone interest rates are headed next. All right, we've broken down the rally. Now let's look to the future. What are the key events that are going to decide if this momentum can actually last? The geopolitical story gave us that initial kick, but now the focus is shifting back to the fundamentals, corporate health, and hard economic data. First up, we've got earnings season, and it's really kicking into high gear. This week alone, we get reports from some major bellwethers. We're going to hear from General Motors, which will give us a read on consumer spending. We'll get numbers from Netflix for the latest in the streaming wars. And we'll get a report from Texas Instruments, which is a super important look into the health of the semiconductor industry. And it's not just earnings. We have to keep a close eye on the economic calendar. As highlighted on investing.com, we've got key data coming out on things like inflation and growth. These are the numbers that land on the desks of central bankers. And believe me, they have the power to either pour more fuel on this rally or dump a bucket of cold water on it. And that really brings us to the big question looking forward, doesn't it? This whole rally got started because of good news on the geopolitical front. But now it has to stand up to the cold, hard reality of corporate earnings and economic reports. So will that new data be strong enough to keep this party going and maybe even broaden it? Or was all the good news already priced in? I guess the next few weeks will tell us. Thanks for watching. Don't forget to like and subscribe.